Welcome back. Well, take a look at oil prices. They've been moving up, opening above $60 a barrel, posting the strongest opening to a year since 2014. I want to check on this here with the Schork Report publisher, Stephen Schork. Stephen, good to see you. Good morning to you.
It's great to you. Happy New Year.
First to you, what do you attribute this move to, around Thanksgiving going into year end? We were talking about $50 and a band, and that was the high end. But then we see all of this unrest in the Middle East. How much do you attribute this move to what's going on in the Mideast? And what about oil demand in 2018?
Well, right. Well, first and foremost, with the Middle East, we're certainly starting off, and this is a known black swan, Maria. So we certainly have, the growing chasm between, as I tell readers in the Daily Report, the chasm between the Sunni side of OPEC, that is Saudi Arabia, of course, and the Shia side of OPEC in Iran. So now with these unrest over the weekend in Iran, you're certainly setting the table for geopolitical risk to be priced into the market. I want to also be clear that, and everyone should realize this, that the bets are in on Wall Street. So that is to say, bullish speculators in the paper market have never been more bullish. They are holding record length betting on higher oil prices. Conversely, players in the real market, actually the producer, the guy who takes oil out of the ground and sells it, they've never been shorter this market. So they've sold a lot of production forward going into the new year. So let the dice roll. You have one segment, a very large segment in the futures market betting on higher prices. The guys who actually produce the oil are really set to hedge and produce more barrels. We're looking at record production in the new year coming out of the United States, an increase of anywhere between 5 to 6, maybe 700,000 barrels a day to a new record. Also, we also got news about 2 weeks ago, Saudi Arabia, and this is interesting, they're in the process of transitioning more towards a natural gas dependent economy. So what that means, Marie, is for their generation needs, their powered internal generation needs, they burn a lot of crude oil each year to keep those air conditioners running. They're switching over to natural gas. So what does that mean, Maria? More crude oil from Saudi Arabia is going to be available to sell to the export market. So we're looking at a tremendous amount of supply coming onto the market. Now, when you asked about demand
Right.
is certainly going to be strong this year. We're looking at a complete rebound in the industrial metal complex, which tells me that the industrial side of the economy, which has been lagging over the last 8 years, is back. And that's going to be supportive for all commodities, including crude oil prices.
Yeah, that's right.
So
That's really good news for
Maria,
economic growth, isn't it, Heather?
Absolutely.
Stephen,
Yeah.
shale oil in the U.S. and Canada has really been a counterweight or a counterbalance to the price of crude. Do you see that continuing, or will that be a headwind?
Right now, that's certainly going to be a game changer going into the new year. We're starting to see a very large increase in the rig counts in the Permian Basin, which is the most prolific crude oil basin in the United States. So those rigs are coming back. And when we look at the producer and the way they've sold this market, they're certainly expecting a significant rise in production this year. Now, I mean, let's also keep in mind that the United States is becoming, it's a fledgling state right now, but a crude oil exporting country. And this is good for the U.S. economy because we're going to be exporting majority of low sulfur, high value crude oil and replacing that with imports of lower value crude oil, a heavier crude oil. So we'll continue to export our caviar and replace it in buying tuna fish at a tremendous margin. So it's a win-win for the industry and a win-win for the economy.
Well, Stephen, we're already the #1 exporter of refined product in the world,
Yes.
or have been. But Stephen, is it possible that we actually ramp up production in the United States even more than expectations? Because it's already expected that we're going to hit record daily production here. You said 500 to 700,000 barrels a day. Could it be north of that? That could put, I guess, bring prices back down to earth, so to speak.
Well, yes, I appreciate that. And let's keep in mind that, $50, $55, $60 oil compared to where we were just 15 years ago is still a very handsome price. This is the price that many, myself included, believe that the producer can make more money, but can production be ramped up even higher? I'm skeptical of that. I think to keep the industry comfortable, they're going to want to see oil above $50 a barrel, be that the Middle East producer or the North American producer. So certainly we have the issue of credit lines, of course, with
Right.
the amount of debt that's been issued in this space. So they will continue to produce, but anything above and beyond expectations, I am skeptical that will occur this year.
Stephen, James Freeman here at the Wall Street Journal. Just wondering, we keep hearing about the frackers getting more and more efficient in that Permian. Aren't they able to produce some of them for much less than that $50 to $55?
Oh, absolutely. There are estimates that in some of these basins, there's money to be made at $30 and $25 crude oil. So certainly that is the potential to bring that oil to the market. But in the greater scheme of things, depending on the geology, as it were, yes, the frackers are becoming more efficient. But if we're going to take a median number of where they're comfortable, my clients, which are some of the biggest producers out there, they're going to be more comfortable and they're happier in that $50, $55 range. So those are the big boys in the room, and the market will tend to listen to them.
All right, we will leave it there. Stephen, great to have you on the program as always. Thanks so much.